I'm seeing a lot of copper. That seems to be a really popular topic right now. I mean, just across the board in general. So
yeah.
it kind of coincides, and it's good timing with modern resources. And there's that other one that's getting a lot of press now too, from Australia, Missouri Copper, I think was the other one. Because
that one's in the DRC and has cobalt.
Cobalt, yeah. So
yep.
Those two, and then of course Ivanhoe, Cordoba. What was the other one that's getting hyped up a lot? Soul Gold, I think, and
There's a need. I mean, and that this can kind of be like a topic. I really like the idea of areas where you really need a huge discovery. Like if you look at all of the copper plays from or large copper producers, they are separated from kind of the medium producers much more than gold. And I'm trying to figure this out for other commodities. I don't know if that's as true for uranium or for nickel. I know in the zinc space, for instance, there's the Kapushi that's kind of like Kamoa, but it's still there's zinc is not not as big of a market as copper. So if you can find that, regardless of where the copper price goes in the next year or two, there's an absolute need for the monster discoveries, like the big tier 1 stuff. And so that's become more of an interest of mine, kind of going beyond just the gold and precious metals. And the same thing's true for oil. Like we haven't had like a huge oil discovery, like the Saudi Arabian stuff still dominates. So that's kind of the big exploration, but that's just been a side interest of mine recently.
You guys want to share what your thoughts are on that? Because I think that makes for a good discussion, because for the most part, for a company or asset to become tier 1, it has to have a lot of drill results already in place and probably a resource as well. So when you get to that point, and the natural evolution of things, you're not trading at necessarily a micro cap kind of valuation. So if you're one of those people that want to get in early to a story, you want the multiplicity factor where you can keep multiplying your gains, then you lose some of the appeal in that sense. But there is attractiveness to tier 1 assets as well, especially if it's got both size and grade. And I think Kamoa from Ivanhoe and Kakula is probably a really good example of that. Yeah. Because you have I think they're calling it now the biggest discovery or copper discovery in the entire African continent.
Yeah.
So when you have that much size, and your cash costs are below 50 cents per pound, then whether you're in a bull market or bear market, this is going to be an asset that's going to survive, and it's going to do well, and it's going to generate cash flow and all that. So how do you approach tier 1 assets? Because they are attractive in that regard, but they do get bid up as well. So how do you look at things from a upside potential that still remains? Like, are you still banking on further discoveries and exploration, or is it just more kind of a safety valve, if you will, because it's such a good asset? It has takeover. It could be a takeover for a major, and even if it's going to be developed on its own, it probably will survive multiple commodity cycles.
Good questions. Yeah, I think this is a really interesting topic that I'm trying to learn more about, and I'll start with kind of like going back to the 90s. I know that the mid to late 90s was much more of an exploration discovery cycle than the mid 2000s. And so that also is kind of a fascinating aspect to me, that, it's already been like 20 years since there's really been a focus on this. And you hear more of the newsletter writers, talking about discovery. Definitely the Brent Cook and Joe Mazumdar, but I don't hear as much about John Kaiser, but I know that he studies that history, and he's mentioned that as well. And so, you look back to the mid 90s, and there were a lot of discoveries across the board. And I will keep emphasizing this because I feel like it's the book everybody needs to read even more than once. But The Big Score, going with Robert Friedland, Diamond Fields, Voisey's Bay, that's the quintessential story of success. And then on the other hand, you have the Bre-X, which is the quintessential fraud story. But both of them were discovery stories. Like that's what's key, is like it is really easy to get focused on one commodity, but we're not talking about one commodity here. We're talking about anything like Jay said, that has that tier one potential, and you want to get in early. Now, I want to add another aspect of this, which I guess I just kind of thought of it. It might be interesting. There's a guy. So I think he's become more open about his pseudonym, but on CEO.ca it's at BD Mindfinder. So I think he's made it clear. So Warren Irwin is BD Mindfinder at CEO.ca, and I think he's open, to at this point for people knowing that, and it's very interesting timing because his hedge fund, like Russo Management, it's a featured article at CEO.ca. It was the top performing hedge fund in the world in 2016. So already you don't have to know anything else about him, but that's amazing in itself. But a key thing that I've learned based on his chatting at CEO.ca is he's pretty obsessive about finding tier one deposits, across the board. And his most recent success, which is a huge part of his hedge fund being top performing, is NextGen. And I personally have a small stake. I wish I had a much larger stake in it, but I like, this goes beyond being just in uranium. Like, it's so dominating that it's going to work, across cycles. It's something that the majors are absolutely going to have to have. Now I'll get back into a couple other tier ones in a second, but Jay made that point, and like, where do you get in? I think that he's kind of expressed, like, even if you miss the early stage, it's so important, like, whether it's at 30 cents, 60 cents, a dollar or a dollar 50. I mean, it's trading at like $4 now. That is one where, if it really has all those qualities, you can buy more on the way up as it becomes more of a sure thing. Now we're gonna go back in history and talk about, like Diamond Fields. That's one where that absolutely worked. But Bre-X, it didn't work. Now the funny thing is, Warren Irwin's also on record. He actually shorted Bre-X and made a small fortune on that. So like, he's worked the tier ones both ways, and he figured that out. But then you move forward into the 2000s, and even though that wasn't really a discovery cycle, he actually made a boatload of money on Fruta del Norte. I think it was with Aurelian. I mean, that's beside the point. But the thing is, that is a tier one, gold asset in Ecuador. So I feel like it's something that I wasn't as focused on as earlier. But like, the big players, like the Warren Irwins, they're always looking for that tier one. And he just did a great talk with Tommy. I don't know if the video. I think the video is online. And if it's not, hasn't really been
It
shared
is,
yet,
yes.
it
I,
will
I
be.
just watched it recently.
Oh, okay,
I think
great.
they
Yeah,
posted it
that's
yesterday.
yeah, it's worth mentioning. Like, everybody should find that. Like listen to Warren Irwin talk, because, like, as another example, he's looking at oil. Not necessarily caring where the oil price is going to be a year or 2 or 3 years, but looking for that tier one asset, because oil is a huge market, and there's still a huge need for these big discoveries. So there's the interesting aspect of the history. There's the interesting aspect of the most successful guy, like, literally in the last year. That's what he focuses on. It's not something I've been as focused on up until very recently, but I'm trying to. And I think it's, if you hit the right companies, it's one of those few types of companies where you keep buying, and you actually might consider doubling down as it's going up rather than it's going down, because the certainty of it being tier one is actually increasing as you know more about it.
Mm-hmm. It's a really intriguing question because I'm actually an Ivanhoe shareholder, and I didn't even get into Ivanhoe so much because of the tier one asset, because they already had a discovery of sorts when I went in. It's just because it was so cheap for a tier one asset. So for my thesis, it just fit perfectly. You had the seal of approval from the big guys. You had the cyclicality of it, the price, really cheap for what they had, close to cash for such a huge valuable asset. Granted, in the DRC, but at the end of the day, stuff still gets done in places of the world that we're not very familiar with. They have a certain risk, but so does the U.S., so does Canada. And at the end of the day, I made that investment, but more so thinking of the cycle, more so looking at, okay, so when the price of copper and zinc, etc., goes up, then this and this and this should happen, right?